10 safe haven forex pairs for a stock market crash. I wanted to go look at the actual correlations, dig into the numbers, and make a case for what is actually safe haven right now, the last several months of trading in the forex world, and what maybe doesn't have as much of a correlation, because these things change all the time, Glenn. If you're reading an economics book from the 90s or the aughts or what have you, very different world that we have now. Even, we talked about it a little bit, even gold kind of trading with equities, not the same safe haven asset that we've seen in the past.
Right, and safe haven here just meaning tends to pick up increase in demand when investors are looking for more risk-off moves. A lot of those risk-on plays not panning out, kind of a flight to quality here, and we see a lot of that action take place in the currency space.
Yeah, keep that in mind, because of course this isn't a scenario of, oh, well, if I have $1,000 in stocks when I am feeling, risk averse, when I feel like there's more risk in the market, I can just buy a safe haven asset and it is safe. We're talking about assets that when stocks move lower, they tend to move higher, and we're going to look at all the numbers. But if equities bounce back, those safe haven assets would probably tend to move lower. And a classic case that the correlation has actually held up recently is Treasury markets.
Right.
And so if you want to look at that, you can look at 10-year or 30-year bond prices relative to the stock market. But we're looking at currencies, US dollar correlation versus the S&P 500 over the last decade. Glenn, you see a mixed bag here, which in some ways is good for the forex trader out there, that this is one of the most diversified asset classes relative to equities. Tends to have a weak relationship on the whole, Glenn. But I was actually surprised going back to the pandemic, where actually right there around 2020, you saw some of the most positive correlations between equities and the US dollar, which is to say at that time, stocks sold off, US dollar sold off,
right,
and then they both kind of bounced back. But in the last 2 to 3 years here, Glenn, you're actually seeing pretty consistently negative or red correlations between the two, meaning that we've seen equities move higher, US dollar move lower, and vice versa. And so this US dollar has been a little bit of the safe haven currency, or the safe haven part of the forex equation, the last couple of years.
Right. Yeah, I am pretty interested in the consistency over the past year. I mean, you look all the way to the right of the graph. It looked like for a second that correlation would flip positive, because just anecdotally, you try and think back the past 6 months, and you think, okay, stocks all-time highs, U.S. dollar, tremendous bull run, similar to what we saw in 2022, 2023, and that at that time, correlation a lot more negative, but yeah, still holding in strong.
Yeah, and we'll take a look now, because the U.S. dollar is only part of the equation here, right? Here we're looking at the U.S. dollar basket relative to the S&P, but now we'll dig into, okay, U.S. dollar and what currencies pose the greatest correlation that we've seen, and are there some currencies that the U.S. dollar is actually positively correlated, or isn't the safe haven currency relative to the stock market? Here you have the top 10 of major currencies and their correlations to the S&P 500. So you'll note that, Glenn, they're all, except for a couple that we'll get to in a second, negative, which is, again, to say that the U.S. dollar part of this is the part that is the safe haven. So if Australian dollar is negative 0.29 correlation to VIX, the U.S. dollar versus the Australian dollar is positively correlated to VIX, or inversely correlated to the S&P 500. As an example, if you were looking at the U.S. dollar as a safe haven play in a risk-off equity environment, you would be selling that Australian dollar, buying U.S. dollar in this scenario. 12-month correlation data for currencies versus the U.S. dollar relative to the VIX, or fear index, show positive correlations for US dollar to VIX. So again, if you flipped these correlations, that would be the US dollar to the VIX piece. And so positive across the board. And if you're positively correlated to the VIX, that means that you're in that kind of safe haven pool, or at least you tend to rise when equities fall, or you rise when fear rises. And the strongest correlation here is that Aussie piece, followed by peso, Kiwi, and Canada not far behind. Not super surprising, right?
Right. And great visual here just to really hammer home the point that all these currencies exist on kind of a spectrum or a range, and where does US dollar land in terms of risk sentiment. But what calls out to me is that none of these are particularly all that strong.
Yeah.
Negative 0.29 on a scale from +1 to -1. Not the strongest correlation we've seen across asset classes when talking about currency correlations, but definitely the standout here. And then all the way to the other side, when we talk about what are these flight to quality currencies, yen and Swiss franc always come up. And here, what do we make of this? Does this just say that on any given day, investors could choose the dollar over the yen, or are these completely uncorrelated?
I love your idea of bringing it up as a spectrum, because if you use in this visual the US dollar as the equalizer across all of these currencies, in my mind it's always like, well, in forex it's a game of relativity. There's always two sides to the pair that you're trading, and so with that idea of relativity, which side of the pair is more risk on? And so here, given historical data, if the equity market was moving lower, you would expect Australian dollar to be moving lower relative to US dollar. Right. Same thing with peso relative to US dollar is more risk on, and thus would move with the equity market most of the time. Again, these aren't the strongest correlations, but you get to the point where yen and Swiss franc on this spectrum, actually they're more risk off than the US dollar in a lot of these scenarios, and so they might tend to rise. And so we broke out the yen to VIX correlation over the last decade as well. And yeah, interesting, you're getting that kind of around zero, slightly positive number right now, because the last several months have actually been red and green at certain points. But you go back to pre-pandemic, Glenn, and yeah, this yen is correlated to the VIX month after month after month for years. So historically, the yen has been a safe haven currency. The last couple of days, we have seen that correlation kind of kick back in. And if you look the farthest point to the right, the correlation is getting greener recently. I don't know if it's going to continue that way, but the yen has been getting back to that flight to quality, that safe haven asset relative to US dollar recently. We'll see if that demand does increase, if fear and uncertainty, if the downside in equities continues. But as a last piece here, Glenn, I wanted to bring this up, that at the end of the day, interest rates are kind of the middleman for forex and for equities, in that, equities are moving lower, bond prices are tending to move higher, and interest rates are moving lower. If interest rates are moving lower in the US, then that US dollar is likely moving lower again. And here you have the correlation between the yen and the 10-year note, much greener.
Yeah, that's a great point, because when you brought up the VIX correlation, yes, more green than red, typically positively correlated. But this just calls out to me that, yeah, when we speak about currencies, you can never pin it on one thing. There are always other factors surrounding maybe a Japan-only story that doesn't have anything to do with U.S. equities. So when we say safe haven, definitely not protected against losses just going to a foreign currency.
Sure.
But then you flip to the U.S. rate play, and this much more positively correlated when we have the yen against the dollar specifically.
Well, so yeah, we'll see if this yen plays out as the safe haven asset. If the stock market crash continues in the U.S.,